Hey guys, Dimitri here, and today what I want to show you guys with slides is why a business and being a business owner is better in terms of profits versus investing into the stock market, trading stocks. Now, I'm not a professional trader. Maybe you guys out there are a lot better than me and you're able to make significant amounts of money with just trading stocks, but I'll show you why doing a business is a lot better if you have some money, some working capital, and then your own personal involvement as the business owner, why you can make a lot more money than just investing. I'm in construction, cabinetry, millwork, so I'm going to use that as an example because that's something that's very understandable to me. And if you're in that industry or maybe a comparable industry, I think you're going to make the connection and understand what I mean. So during the normal course of business within a year, in construction, it's very likely to make 4 cycles of projects. So 4 projects that you start, you complete within a period of 1 year. So while doing those projects, you're using your working capital and your own action, your own involvement, and you're selling a product, you're selling for the skilled labor of employees, and then you're billing for that project. So from the beginning to the end, let's say 3 months is the typical cycle. So you can do 4 of those projects in the year. So what we're gonna do is we're gonna compare that situation versus investing into a stock or stocks at the beginning of the year and waiting for 4 quarters to see what kind of return you will make. If you just Google what the historical average returns of the stock market is, you'll realize that it's 8 to 10%. So just for simple math, we're gonna say it's 10% a year, and we're gonna divide that return into 4 quarters, so 2.5% every quarter that you will profit off of your stock investment. So here are some basic slides that I made that will kind of show you what a typical quarter or cycle will look like. So let's say you start in subcontracting. So doing what I do, selling cabinets, or maybe you're a roofer or a plumber or doing something in the construction industry. So let's say it's January, you start a new project. That's project number 1. And the comparison that we're gonna do is $20,000. So either you have $20,000 to invest into the stock market, or you have $20,000 to work with within your business. So in a typical construction project, what happens is, let's say you sold some countertops. So you're going to be doing countertops on a project. What will happen is very often you're going to need to make a deposit with the countertop supplier. So half of that money you're going to use up front right away. So you're going to give the supplier $10,000 to have them get the materials going, just lock in the schedule. So you're gonna invest, so to speak, $10,000 into that project. Comparably, it's the beginning of the year, you're going to invest $20,000 into the stock market, right? We're gonna use $20,000 in this situation, of which $10,000 you need to invest right up front, and then $20,000 into the stock market because that's the investment you're making right away. So this is the beginning of the year, new project number 1, new stock investment, new stock pick. Where is this gonna go? So a few months go by, it's March. In your project, you're either partially complete, or let's say you completed the project already. You need to pay the countertop company or whatever other supplier, whatever product you're delivering, you pay them the $10,000 for the completed scope now. So there's your $20,000 that we were talking about. And what you're going to do is you're going to, at the same time, bill your customer the amount of the project. So, and I'm using pretty standard markup rates here. So I'm billing $23,000 on that $20,000 project. Now the stock market guy here, he's making his 2.5% because we're splitting up that 10% average return over the 4 quarters. He's making $500. So he's now at $20,500 And the subcontracting guy, the construction guy here, he billed $23,000. So his customer is paying him $23,000 for the project. A few more months go by, it's June. So the subcontracting guy is on project number 2. He's billing $23,000. Again, we're using kind of the same scenario. So now he already made the profit of $3,000 from the previous project. He's making $3,000 profit off of this project. So he made $6,000 now. The stock market guy, he made his additional 2.5%. Again, you know, the stock market goes up and down. So we're just, for ease of understanding, we're just spreading it out equally. So he's up another $500. He's at $21,000. A few more months go by. So it's September. The business owner, the contractor, he completed project number 3. He's billing another $23,000. So his profits from the first project, $3,000, second project, $3,000, and now this project, $3,000. So he's up $9,000. And remember, he's involved with a business. Obviously, he's putting in some work. He's typing up emails. He's communicating with the customers. He's doing sales. And he's using that $20,000 of working capital to facilitate that transaction. The stock market guy, his $20,000 that he initially invested, it's still sitting there. I don't know, maybe he's trading, maybe he's not. We're doing the 10% return as the benchmark, so he's up another $500. So he's at $21,500. So already you can see that, you know, returns on just cash, on money, without any kind of individual involvement, without actually doing anything, it's not worth that much. Like, he's up $1,500, right? And then the contractor here, the business owner, he's already up $9,000. You know, he's using the same amount of money, but because he's doing a business, he's selling a product, he has some of his own personal involvement, that's worth a lot more, and you can make a lot more money doing that. And now we're at December, so we completed another cycle of a few months. Project number 4 for the business owner here. He's billing another $23,000. So far his profits are, you know, $3,000 per project, and obviously this is just, you know, on average. It's gonna vary here and there. So just to see the numbers really easily, I'm making everything the same. So 3,000 times 4, he's up $12,000 already in profit. And then the stock market guy, he gets his additional 2.5% return. He's up another $500. So he's wrapping up the year with $22,000 in his brokerage account. And the business owner has a $12,000 profit in his business account. So he started with the $20,000 of working capital in his business, and he made another $12,000. So he's at $32,000 in his business checking account. So if you were to think of this as returns on your capital, you know, that's a 60% return versus the 10% return for the stock market guy. So that was a simple explanation of why it's important to start a business, why it's important to be involved in a business yourself. You know, while you're at the age where you can do stuff, where you can be active every day, you can be selling something, definitely is the way to go versus just trying to use your cash to play around in the stock market. Unless you have a significant amount where you're lifting a lot of stock weight with a lot of money, you probably shouldn't be doing anything in the stock market. You should be focusing on building a business, generating a higher return on your small amount of capital by your own involvement in the business. And then once you have accumulated a lot of cash, then you can deploy more of that cash, obviously at smaller returns, as you can see. But because you have such a bigger nest egg of capital, then you can invest into the stock market. So I personally disagree with the view that, you got to start early, you got to start putting, small amounts of money away into index funds and mutual funds, and by the time you're 100 years old, you're going to have $1 million.
So did you know if you save $200 per month at an 8% annual return, then in 45 years you would have over, wait for...
I don't think that's the way to go. I think you should accumulate a small amount of cash and start a business and use as much of that cash as working capital to get higher returns on it, and then invest into the stock market or real estate. But that's just my view. That's my experience. Comment in the comment section if you disagree, if you have a better technique, and I'll see you on the next one.